Welcome to Matters Financial and Geopolitical from a Frontier. I hope you had a great weekend. Let me start with some macro thoughts. Holger, G20 seals currency peace pact and supports China's economic policy to clean up the bubble, and I'll get to that in a moment. What I wanted to show you was this chart he's posted, which shows you the yuan and the Shanghai Composite Index. And I think it's interesting to see what's actually happened. Home thoughts. I took this photograph of a hibiscus as I was going for lunch at the Mafaiga Club yesterday, and I thought of Ai Weiwei and his flowers for freedom, but it was such a visually attractive yellow. I thought I'd post that. I like this photograph from Scott Kelly, August the 17th. Woke up to the snows of Kilimanjaro. Good morning from the space station. And that took me to a poem by William W. Yeats, The Land of Heart's Desire. Fairies, come take me out of this dull world, for I would ride with you upon the wind, run on top of the dishevelled tide, and dance upon the mountains like a flame. On that note, I'll put up a photograph I took of the snow peaks of Kilimanjaro as we were flying down to Maputo, and a quote from Ernest Hemingway. There ahead all he could see, as wide as all the world, great, high, and unbelievably white in the sun, was the square top of Kilimanjaro, and then he knew that that was where he was going. Political reflections. I went back to something which I haven't read, a book I haven't read called The Information Bomb by Paul Virilio. Listen to what he says. After the first bomb, the atom bomb, which was capable of using the energy of radioactivity to smash matter, the spectre of a second bomb is looming at the end of this millennium. This is the information bomb, capable of using the interactivity of information to wreck the peace between nations. The smaller the world becomes as a result of the relativistic effect of telecommunications, the more violently situations are concertinaed, with the risk of an economic and social crash that would merely be the extension of the visual crash of this market of the visible, in which the virtual bubble of the interconnected financial markets is never any other than the inevitable consequence of that visual bubble of a politics which has become panoptical and cybernetic. Probably going to have to read that again as I did, but it's very powerful, and it's on rich wrap-ups at the top of the page. Say hello to China's new toys, says Pepe Escobar. China's aggression is destabilizing its neighbors in the South China Sea. China never stops cheating on world trade. China's stock market is a trap for investors. China's devaluation of the yuan is a dirty trick. China is imploding. President Xi Jinping does not have any credibility left. And China is a major threat because the Pentagon said so. Whatever. Cue to clear blue skies over Beijing, engineered with a hefty dose of political will, lots of glittering toys, aerial and terrestrial. Guests from all over the world, absent the predictable Western suspects, a made-for-TV spectacular dwarfing the Oscars, no teary-eyed acceptance speeches, what's not to like. And then there it was, strutting its little stuff on the Tiananmen catwalk, the Dongfeng 21D, a cracking land-based anti-ship ballistic missile capable of destroying one of those multi-billion-dollar US aircraft carriers with a single hit. Let me put up a photograph of the Dongfeng 21D, China's anti-ship ballistic missile known as the Carrier Killer. And then take you to an article I wrote over the weekend, China must fix its economy despite a military show. China put on quite a swanky show last week to commemorate the end of the Second World War on the V-Day parade. Brazilian journalist Pepe Escobar opined in the Asia Times, and then there it was, strutting its little stuff on the Tiananmen catwalk the Dongfeng 21D, a cracking land-based anti-ship ballistic missile capable of destroying one of those multi-billion-dollar US aircraft carriers with a single hit. All of the major missiles were labelled with their English abbreviations in big white letters. This was surely because there was a message, and the recipients of this Chinese message speak English. In particular, one of the key elements of the Pentagon's pivot to Asia is the air-sea battle concept. This concept envisages the battle beginning with a blinding attack against Chinese anti-access facilities and incorporates distant blockade operations. The Dongfeng 21D is China's riposte to the blinding attack component of pivot to Asia. President Maduro of Venezuela turned up, and Venezuela was slaughtered $5 million. President Omar Bashir of Sudan was welcomed as an old friend of China's by President Xi Jinping. Other African presidents have been beating a path to China, from President Eduardo dos Santos of Angola to President Joseph Kabila of DRC, and even South Africa's Jacob Zuma. These folks are nursing blinding hangovers. The challenge for the Chinese leadership remains one of stabilizing its economy. However, the negative spillover has already infected the commodity markets. Crude oil remains below $50 in New York, copper is at multi-year lows, and it was the commodity markets which have proven the early warning signal. The rout in the commodity markets has in turn routed the monoline African economies. Zambia's kwacha, for example, has crashed 34% this year. 70% of Zambia's exports go to China. The rand is back at levels just below 14 to the dollar. The cause of China's slowdown and the effect of routing of commodity-related currencies is as plain as day and for all to see. Some African countries like Angola are loading the balance sheet with debt because this unprecedented and disjunctive slowdown is increasing regime change risks. The problem with this strategy is that if the commodity markets do not rebound, they could end up like South Sudan, which at the last count had debts on the balance sheet of $4.1 billion with very little to show for it. This strategy of adding more leverage in the down market could compound the situation big time down the road. The commodity markets move in broad sweeps. Those hoping for a Hail Mary pass and betting their countries on that pass look to me like they are making a bad bet with potentially outsized tail risks. As Nassim Taleb points out, debt increases tail risk, whether it's personal, corporate, or governmental. A rise in debt, he warns, implies nothing less than a rise in the risk of catastrophe. The problem with the strategy is that if the commodity markets do not rebound, they could end up like South Sudan, which had debts of $4.1 billion with very little to show. Why is China parading missiles on TV, asks the New Yorker. If only citizens marched and saluted like soldiers, thinks the king to himself. If only society could be arrayed in perfect rows and matching colours. If only the stock market would rise steadily like a flock of 1,000 pigeons. Saudi Arabia says it's satisfied with Obama's assurances on the Iran deal. Speaking after the meeting between Obama and Salman, Saudi Foreign Minister Adel al-Jubeir said Obama had assured the Saudi king that the agreement prevents Iran from acquiring a nuclear weapon, includes inspections of military and suspected sites, and has a provision for the snapback of sanctions if Iran violates the agreement. Under those conditions, al-Jubeir said, Saudi Arabia supported the deal. Now we have one less problem for the time being to deal with regards to Iran, al-Jubeir said. We can now focus more intensely on the nefarious activities that Iran is engaged in the region. Interesting data from 2003 to 2015, the Saudi share of the US's oil supply declined by half to 6%. Mark Knoller tweeted this and said this would be the longest motorcade ever. Of course, it's King Salman's, and Four Seasons rolls out the red carpet. Everything is gold, says one Four Seasons regular. Gold mirrors, gold end tables, gold lamps, even gold hat racks. Red carpets have been laid in hallways, and even in the lower parking garage, the king and his family never have to touch asphalt when departing their custom Mercedes caravan. And Badr Kumar probably sort of is closest to my line of thinking. Obama takes time out from the King Salman doctrine. Saudi King Salman brought his own gold furniture with him to the Grand DC Hotel, gold mirrors, gold end tables, gold lamps, even gold hat racks. Of course, Obama is in no position to advise Salman about how to go about the reform that Saudi Arabia needs. But then Saudi Arabia's security and stability is Obama's concern too. Obama is not repeating the mistake that Jimmy Carter made in regard of Iran, but the analogy isn't entirely out of place, and I agree with him. Middle East Eye tweeted Abdullah Kurdi buries his sons Aylan and Galip and his wife Tima in Kobani. Time has got an article, What the Image of Aylan Kurdi Says About the Power of Photography. That took me back to Virilio again. Images contaminate us like viruses. Friday was by far the deadliest day for Emirati military since the UAE Federation was founded in 1971. 45 soldiers were killed in Yemen, point of fact. I like this photograph of an Iraqi F-16. The Iraqi military said the F-16 raids achieved important results that will impact future operations. Jesus Alfredo Guzman Salazar tweeted a happy snap with his father, El Chapo Guzman, but repeatedly forgot to turn off the feature that tags your location. And then Global Post is tweeting, Lebanon's young protesters want to end the old way of doing things, don't we all? Currency markets, the euro is at 111.66. Dollar index has slipped from its opening level of 96.22. Japanese yen 119.28. Swiss franc 0.9720. Pound in this morning was at 151.91. It's now popped higher to 152.51. The Aussie, which has been soft, 0.6935. Indian rupee 66.676. South Korean won was above 1200 when I looked. Brazilian real 384.20. Egyptian pound 782.60. And the South African rand 13.87. Dollar index, I'll put up a 6-month chart. Non-farm payrolls rose less than expected, 173,000 last month. But the unemployment rate dropped to a near 7.5-year low, and wages also accelerated, so putting that September rate hike back into play. Euro dollar, let me put up a 6-month chart, 111.66. According to a report on Bloomberg, China's Xi kept repeating the bubble burst at the G20 meeting. Came up about 3 times in his explanation Friday of what is going on with China's stock market, according to a Japanese finance ministry official. When asked by a reporter if Xi was talking about a bubble, Japanese finance minister Taro Aso was unequivocal. What else? Bursts. Shanghai Composite has tumbled 39% since June 12th, when the gauge reached its highest level in more than 7 years. Xu said, we think it's pretty close to the end. To some extent, the leverage of the market has been decreased substantially, and we think there would be no systemic risk. I'll put up a 5-year chart that Holger posted on September the 4th of the Shanghai Composite Index. China has revised its annual economic growth rate in 2014 to 7.3%, from the previously released figure of 7.4. I think the real number is about half that. And I wrote about this on the 31st of August when I spoke about how China's volatility is causing influenza across Africa. And I also wrote about how China was roiling the markets previous week. Commodity markets, as I said in November last year, the commodity super cycle is dead in the water. Gold, last trading at 1121.47. I'm bearish about it. Crude oil, last I checked, $45.85. Let me put up a 6-month chart. I think we'll see fresh 2015 lows. I like this photograph that Time magazine published. Ethnic Tibetans in traditional dress wait to perform at a local government-sponsored festival on the Tibetan Plateau in Yushu County, Qinghai, China. Let's go to Africa. Angola awaits its Arab Spring, says foreign policy. This is Angola in 2015. The economy has been expanding for over a decade, but unemployment remains stubbornly high at 26%, and over a third of the population is below the World Bank's poverty line. The urban poor have seen few benefits from the boom. Instead, new luxury villas now clash with sprawling slums, underlining the country's persistent inequality. A privileged elite remains firmly in control of the long-standing autocratic government, which has attempted few economic reforms that would make a difference for ordinary people. The country's institutions are best characterized as extractive rather than inclusive. There is minimal budgetary transparency and little press freedom. The fact that this description could just as easily apply to Tunisia or Egypt in 2011, right before the Arab Spring revolutions swept away their governments, should give pause to the rulers in Luanda. Angola indeed looks like a country heading towards a dramatic political transformation. Angola indeed, protests have been intensified across the country. In Luanda, the capital, urban youth, veterans of the country's prolonged civil war have been protesting since 2011. Demonstrations have now been intensified, hinting that new socioeconomic concerns are merging with pre-existing political tensions. Groups in Cabinda and Lunda North and South provinces have also begun protesting against alleged human rights abuses by the military. These developments are creating a quandary for Angolan authorities. Drastically cutting expenditures might set off an Arab Spring-like scenario, new rounds of even more violent demonstrations, and the possibility that events will spin out of control. On the other hand, turning to the international financial institutions such as the IMF or the World Bank would make the government vulnerable to outside pressure to improve governance, pursue economic reforms, possibly leading to an opening of the political system and the loss of the regime's monopoly on power. For the authorities, neither option is acceptable. What the government must find attractive in its chosen strategy is the prospect of maintaining the status quo while holding out the hope that stability and relative peace can be restored simply by mortgaging the country's oil. Actually, the strategy has been in place since around 2004 and is often referred to as the Angolan model. Essentially, it involves getting China to extend Angola massive lines of credit. These currently amount to around $20 billion, which are used to finance the government's key capital projects, such as a new international airport in Luanda, electricity grid improvements, and a liquefied natural gas plant in Soya. Payment is specified in oil, with the requirement that 70% of project inputs be sourced in China. All in all, Angola plans to borrow $25 billion in 2015 to cover the oil price drop shortfalls. That's the Hail Mary pass I was speaking about. While not officially confirmed, leaks from the government suggest the latest Angola-China deal could involve Chinese use of over 1.2 million acres of prime agricultural land as a warranty for 30% of the loan. If this deal takes place, it will only heighten tensions with the local population, many of whom farm the land in question. To date, Angola has escaped Arab Spring-type turmoil for three primary reasons. First, after a long, bloody civil war, Angolans place high priority on security and stability. Second, as a major oil producer, the government has had sufficient financial resources at its disposal to buy peace. Third, shortly after Arab Spring uprisings in Tunisia and Egypt, the government stepped up its digital surveillance of suspected dissidents and their associates. One piece of spyware developed for this purpose was able to take screenshots of the suspected individual and then forward them to security personnel. As usual, the case with autocratic, governance-deficient, oil-based economies, vulnerability is never recognized or acted on until it is too late. I wrote this on the 10th of August when I said the end is nigh for crude oil and oil producers from Caracas to Luanda, from Riyadh to Abuja. And I also quoted Kapuscinski. If the crowd disperses, goes home, does not reassemble, we'd say the revolution is over. I was saying it's only just beginning. Let me put up a photograph of President Dos Santos. And Then quickly touch on Burundi, where the Guardian is saying fear stalks Burundi as besieged regime turns to torture. There is a desperate attempt to normalize things. One locally based analyst said they want the rest of the world to think everything is back to normal, but this is not the case. It is now a country of rumors. There's no media, and everyone in the know has fled. I don't think anybody really knows what's going to happen. Put up a photograph of President Nkurunziza. Barclays Africa Trade Index, interesting report. The PDF link is on the website. It's talking about the sleeping giants being Ethiopia, DR Congo, Mozambique, Ghana, and Tanzania. Very interesting, well worth reading. Saying 10 years ago the sum total of SSA economies other than South Africa was equivalent in GDP terms to Belgium. South African all share fell sharply on Friday, down 2.6%, and the all share is down 1.34% year to date. Dollar rand, when I looked last, was 13.875. It looks inevitable that will plumb new lows. EGX 30 fell 0.3% yesterday. It's down 18.51% year to date. Nigeria all share is down 14.84% year to date. I think there's a secondary sell-off coming. Aliko Dangote is said to be looking beyond Mugabe, whom a senior minister admitted could go soon one way or another. Dangote is taking a long-term view on Zimbabwe. He knows the president, given the perception he's part of the problem, is going to go soon one way or the other. He has informed advisors and uses risk assessment firms to analyze the environment and make decisions. The Ghana Stock Exchange Composite Index is down 7.12% year to date. Coming to Kenya, the I&M Bank have announced that they're going to buy out 100% of Gyro Bank's shares. We're uploading that on the website. So that's interesting consolidation in the banking space. According to data released by the Central Bank of Kenya, mobile money payments grew 18.2% year on year as of June, compared to card payments, which increased by 4.2% in the same period. Safaricom is opening M-Pesa to third-party developers. That's a good move. M-Pesa, of course, this is a photograph of a M-Pesa stall on the other side of the road from Safaricom's HQ that I took 1,214 days ago. Safaricom share price, 14.85, trading P is 18.563. Have a look at that interview I did with Bob a while back. Mauritius targets 77% premium on Tycoon's Britam's stake. Mauritius Finance Minister last week announced the plan to sell 425.5 million shares for $128 million, according to a Reuters report. Mauritius seized Mr. Rawat's assets in early April after accusing him of running a Ponzi scheme. The target price is considerably higher than where the market is trading right now. If you're interested in Britam, have a look at the share price data link. Nairobi all share is down 11.572% year to date, but is up 4.74% since closing at a 2015 low on the 27th of last month. NSE 20 is down 19.133% and 1.31% above a 2015 closing low from the 27th of August. Once again, thank you for stopping by. I'm always grateful.